Hello Vietmaxim family and welcome back to my channel. Make my day by smash that like button. Alright guys, it's been over 3 months since I look at Dogecoin. Doge has been on a tear in 2023. Last year Doge dropped all the way down to about 6.4 cents, right around December 31st. And after that, starting the new year, the price rebounded. And since then, Doge ran from about 6.4 cents all the way to what it is trading right now, which is around 9 cents. And we're looking at almost 50% increase in just 1 month. That is very impressive. So now the question is, will this uptrend momentum continue? Doge is trading right at this major supply zone, which is around the 9 to 9.5 cents. And there's a lot of selling pressure right now. In order for Doge to continue this uptrend, it has to find enough buying support to break out and cross over this. And why am I saying this is a major supply zone or a major resistance? Here, if we look at the chart over the 2-year periods, as you can see, back in 2021, when Doge was trading below 1 penny, it had this major run up and then spiked all the way to about 9 cents. And then the price retraced, was able to break out. And after that, we saw this major spike up in price. And around May of last year, the price broke down and dropped below 9 cents. And since then, as you can see, it found support at around the 5.5 cents, retested the 9 cents again, got rejected. Was able to cross over that, but not for long. Immediately after that, the price broke down. And at this point, again, it dropped below this 9 cents. So now, Doge is trading at right around this supply zone. As you can see, if we zoom into this area, Doge make the first attempt to cross over this area. Got rejected, retested again, got rejected again, as you can see so many times. So this is a brick wall that Doge has to be able to break out and cross over this in order for this uptrend to continue. Let's take a look at the shorter time frame so that we can see and maybe try to determine what direction that Doge would likely move. This is the 1-hour chart, and as you can see, Doge dropped down to about 6.4 cents around the end of 2022, and after that, it started this reversal. When you look at the chart, you can recognize right away, this is an inverted head and shoulder. You have this is the head, this is shoulder, this is another shoulder, and after that, it broke out. So if we draw this inverted head and shoulder pattern, we can almost predict the target price for this run up. Let's just do that. All right. So let's just draw this. This is the first shoulder, neckline, the head, neckline, another shoulder. And then at this point, it broke out. So the target price, normally what I would do is just take this line to right to about the head, and then just move it, extend it that up. As you can see, the target is right where Doge ran up and very much hit a target price. And the minute it hit a target price and ran into the supply area, seller pushing the price down. So essentially what happened is at this point, Doge consolidate, retrace, retest, retrace, and now it is retesting this major resistance area again. So now if we look at this chart again, and I have all this circle here, this circle representing every time when Doge tried to retest the supply area, it got rejected. It got rejected here. But what's really encouraging is when the price retraced and the minute it tests the support of this upward trend line, buy a step in, they drove the price up. So essentially what happened here is they created this higher low. And the same thing happened every time when it gets rejected. The price retraced as it dropped near the support support of this trend line, buy a step in again and push the price up. So we have this high and low every time. And now we are at the point where Doge is testing this critical 9 to 9.5 cents area again. Now, if we look at this chart and see how the price behave, this is a very bullish sign because what we're looking at here is a classic case of an ascending triangle. This is the ascending triangle, a very bullish sign. If Doge can get enough buying support, cross over this, and normally after we see a run up, most likely it's going to retrace. And the minute Doge can find support right at around this area and bounce up, then those would likely run up and retest this prior high at around 11.5 to 12 cents. So that is a very encouraging sign. But at the same time, what we have to be careful is this. If somehow those cannot break out, and if the seller can push the price down, we have to make sure that the price does not drop below this upward trend line. If it does, the next support level has to be at 8 cents. The price has to find support and bounce up. If it can do that, most likely the next time when it retests the 9 cents, there would be enough buying support to push it above that. If there is a breakdown at 8 cents, then there's a very good chance that we're going to see those retest 7 cents again right at this neckline. Now, go back to the daily chart, especially the moving averages. Very bullish, as you can see right at this point. The price traded above this red line, which is the 10 days moving average. And since then, it has been riding this 10 days moving average. Every time when the price dropped below the 10 days, buy a step in, push it up, and then the price continue to trade above the 10 days moving average. And also at this point, we have the 10 days, which is the short term, cross over and lead the 50 days, which is the longer term. So this is definitely a bullish sign. There's a very good probability that we could see Doge either break out within the next couple of days, or it may retest the upward trend line again. And most likely, I think it will be able to break out and then eventually run up and test the 11.5 to 12 cents. That is, I think so. I mean, there's a very high probability that is going to happen. There's always a chance that if there's too much selling pressure and if the price breaks down. So let's say if I were to look into trading Doge, I would not enter where it is right now, because at this point, we don't know which direction it would move. My preference would be for those to trade above the 9.5 cents. The minute it crosses over 9.5 cents, I would establish my position at that point because the risk would be a lot lower than where it is right now. That's it. Give me a like if you appreciate this content, and if you like this sort of boring videos, make sure to click that subscribe button and turn on notifications.